Now we're rolling, back in the action once again. Hope you had a great day out there. Back to work here this evening. It's that time of day again, after all. Monday evening, it is February the 10th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find the best of the best entry setups using a very simple 3-step strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. Tonight, my job is extremely important because in tonight's video, we're identifying the best levels of support and resistance, the best entry setups for tomorrow, and most importantly, the biggest traps to avoid in tomorrow. That's Tuesday's trading session, and we have a lot to cover in this video tonight. As you can see in the background, all the charts are ready to rock and roll. We got the oil, the S&P, the Nasdaq, and the gold. We're going to dig in, get our hands dirty on those charts tonight. We get some great setups coming for tomorrow morning's trading session. But of course, we also got to grab the calendar. Got a big, busy week. We got Powell this week. We got some big CPI numbers, some retail sales. Got a lot of news on the schedule, and I want to make sure you know kind of the roadmap for how to trade around those news events and maximize our time here this week. So charts are ready, calendar's ready, you're ready, I'm ready. Before we jump into the video tonight though, I just want to remind you, if you're here for the first time tonight, first time tuning in, it's great to have you with me. Make sure you subscribe to our YouTube channel. That way you never miss the next great trade setup. Where hit that subscription button right below the video tonight. Hit that bell icon so you always get notified every time I publish something new. And don't forget, if you got any questions, drop those questions in the comment section below. I'll always be hanging out after we publish the video down in the comment section, answering all the questions that come in. And if you tune in every evening, if you're part of the group that tunes in every evening on this video newsletter, hit that thumbs up button for me. It means the world to me that you guys and gals tune in every evening to spend a little bit of your busy schedule with me on this video newsletter. So don't forget, make sure you subscribe to this channel, drop those questions in the comment section below. Hit that thumbs up button for me if you had a great weekend and excited to be back here on this video newsletter. But let's not waste any more valuable time. Time is money. Let's get into this video here for tonight. Starting off tonight with the economic news calendar here. We're taking a look at the second week of the month of February. What do we have here in the layout here this week? Now, of course, last Friday was the non-farm Friday report, right? So usually the Monday afterwards is kind of a wide open schedule, and you can see here we didn't have much going on in today's trading session, right? But that is pretty much all we have to worry about as far as not a lot going on. The rest of the week here is jam-packed. You can see as we look at tomorrow's trading session, we get Jerome Powell at 10 o'clock, Jolt's report at 10 o'clock. Big news tomorrow around that 10 o'clock, right, top of the hour. We're going to hear from Jerome Powell again on Wednesday at 10 o'clock. We got the inventory report at 10:30 Eastern time. We got the CPI number, right? Anytime we see CPI, we always know gold and currencies, right, on Thursday morning, and of course retail sales, the big headline number on Friday morning. So we have a lot to cover here this week, right? Every day has some really big news reports coming out. Tomorrow, you'll notice here though, as we look at tomorrow's trading session here tomorrow, really the big news is Jerome Powell at 10 o'clock Eastern time. Now, this is his semi-annual, so twice a year, right? Jerome Powell gets in front of the House, the House Banking, the Senate Banking Committee, right? The House Oversight Committee. He'll be in front of the Senate tomorrow and the House on Wednesday. These are pretty big deals, right? When he gets in front of the Congress or in front of the House and talks about the monetary policy here in the U.S., people will be listening in tomorrow's trading session. Whenever I see Jerome Powell speaking, on Capitol Hill, I always know I've got to find my setups either before he starts, right, or usually about 15 to 20 minutes after he starts speaking. What will happen is the market will go into a bit of a lull. It'll be a little bit sleepy there around that 10 o'clock, and that's natural because traders are kind of waiting to hear what he's going to say. So tomorrow morning, my plan is pretty simple. Set the alarm clock a few minutes early tomorrow, get to your desk, get everything prepped up early tomorrow. That way you can get some setups with us in the trade room before he comes out at 10 o'clock. And then obviously We'll give him some time to kind of get comfortable at the podium, and hopefully stuff he's talking about tomorrow will give us some nice setups here, right, as we go into the rest of the session. But again, usually whenever you've got Jerome Powell speaking at, he's speaking right at 10 o'clock, twice a year he does this. Tomorrow happens to be one of those times here on Capitol Hill. Want to get to it before 10 o'clock, right, that 8 o'clock till 10 o'clock block, or, 15, 20 minutes after he starts speaking. We typically do see the markets get a little bit quiet, right? Kind of everybody kind of tunes in and listens to what he's saying. He probably will not say anything outrageous, I would imagine, talking about probably the coronavirus, the price of oil, and kind of how that has some impacts on the economy. But, we've heard from the Fed many times before. They're not planning on touching rates this year, with the equities at all-time highs right now, with jobs coming in last Friday, pretty good number last Friday. I don't anticipate him going off script very much. I'm sure most traders would probably assume the same thing as well. However, right, we always want to listen in and see what he has to say. Get to it early, right, before that 10 o'clock top of the hour. And then again, give him some time to kind of get warmed up. And then we'll, of course, get back on the horse as we go into 10:15, 10:30, into the rest of the morning session. Speaking of the morning session, tomorrow morning and every morning, 8 o'clock Eastern time, in our trade room, right, we'll have a front row seat for everything we talk about in tonight's video newsletter. And then we'll come back tomorrow night and we'll put a plan together for Wednesday, because Wednesdays, you'll notice Wednesday, we got that inventory number at 10:30 Eastern time. So it'll be a little bit different dynamic as we go into Wednesday. So we know this is the schedule here for the week. We know this is the good stuff for tomorrow. We also have a couple kind of known unknowns we're tracking right now. I mentioned the coronavirus, right, coming out of Asia. There seems to be this kind of undertone right now that somehow we're going to get some wake up call. There's some bigger number out there. I think they just over the weekend, I think the coronavirus surpassed the SARS problem about 20 years ago. Something like 800 deaths at this point. There seems to be this growing concern, though, and of course, I'm just kind of going off of what I'm seeing on headlines right now, what I see among other traders. I talk to a lot of traders, and a lot of people seem to think there is there's an elephant in the room, and that there may be a bigger number that may soon come out that may really spook these markets. Now, obviously, right now, that is just speculation, right? It does seem like China's doing everything they possibly can, but we heard about some new cases in the U.S. We heard about new cases in the U.K. over the weekend, obviously throughout Asia. That has been a concern. And maybe nothing, but that is definitely something we're watching here. As of last week, it didn't look like this virus was really it looked like it was puttering out a little bit, losing momentum, if you will. This morning, though, we come in, there's a lot of kind of chatter back and forth right now that something else might be brewing out there. It's definitely something we are watching closely here this week. That could really spice things up tomorrow if we hear some headlines out of Asia. And then speaking of headlines, we continue here to hear about this soap opera happening behind the scenes with OPEC. Remember last week, the Russians were the only holdouts. From what we know so far, this may not be the truth, but this is what they're telling us, is that it seems like the majority of OPEC Plus, now they call it, right? The majority of OPEC Plus countries, they want to cut production because, in case you've been living under a rock, oil's been pinned right to that $50 a barrel lately. So, the Russians apparently the only ones still holding out. If you looked at oil today, oil was very rangy, very consolidated. It feels like oil's saying, come on, cut the production. Give us a chance to get a run going on here. If we hear something from OPEC tomorrow that says, okay, the Russians are in, we're in for a production cut, we could go from $50 a barrel to 60, 65 in a couple days, right? So this is definitely something we're watching here for tomorrow. It all kind of revolves around this virus, right? The virus, of course, is what killed the demand. Well, let's not go that far. There was a lot of other reasons why the demand for oil has been lower. A lot of supply is a big problem, right, as well. But let's be honest, right? This issue with the virus, everyone's worried about it hurting the Chinese economy, air travel and oil demand for the airliners, things like that. So we'll see tomorrow. And of course, this week, we'll be watching to see more headlines about the virus and really paying close attention to what they're doing over at OPEC OPEC because, like I mentioned last week, everybody was kind of banking on. The market was already priced in a production cut, but they never got it. And so that might be something we're looking at tomorrow, Wednesday, Thursday. We don't know, but those are kind of the quote-unquote known unknowns as we go through this second week of the month of February. So tomorrow, get to it early. Careful around 10 o'clock, right? It's too bad, too. We get that JOLTS report coming at 10 o'clock. It's usually a pretty good news report, but I would imagine that'll take a back seat to whatever comes out of Jerome Powell's mouth tomorrow morning on Capitol Hill. Will we hear more from China? How will that spice up these markets? Will we hear about a production cut from OPEC Plus, right? Those are the things I'm watching for tomorrow. Tomorrow morning, of course, 8 o'clock Eastern Time. We're going to do this together in our trade room. Speaking of which, let's get some charts going up here tonight. I got the calendar's all ready to go for this week. You guys know the plan here, the most important things for tomorrow. I got some charts here for us. Oil, S&P, NASDAQ, and gold. Let's jump in first, the black gold, the Texas T, the crude oil futures. What do we know right now about oil? There are really two main components that we know about oil. One is obviously this bearish bias, right? We can obviously see the market is pretty bearish. In fact, every time it's tried to get up off these lows, right, like a Sunday afternoon, right, just keeps dragging you right back down to the couch again. So it definitely feels like this market's very heavy. Every time it goes up, you'll notice every time it goes up, these buyers fail and it keeps crumbling back down again. Again, as I mentioned earlier, we had that rally, middle last week, right? That rally back on the 5th last week, but we kind of had that rumor going around that we're going to cut production, but again, it kind of fizzled out on us. So will we get the production cut tomorrow? I don't know. I don't know, right? We will be definitely tuning in, though, to hear more about that as we see, right, more information coming out. We know we're bearish, and a bear market tells me I want to sell at a level of resistance, right? Now, what else do we know right now? So we know the market's bearish. We know we got sellers want to sell. What else do we see? We see a big old range, right? Now, originally, this is a triangle this morning, but later on in the afternoon, we got some double tops, double bottoms on this. So I've kind of evened this thing out here now as a range. Now, what does a range tell me? Ranges tell us to buy low, sell high, and avoid the middle. In fact, we'll use the size of that range to define my sell zones. The size of that range defines my buy zones. And really all I want to do here is I want to make sure I'm buying off the low. I want to make sure I'm selling off the high. And I want to do my best to stay away from the middle of that range because that's where things really get weird, right? That's where they really get really choppy inside that range. So where are we right now? We're underneath the range low, right? So we're down below the range. What exactly do we do below the range? We're supposed to be a buyer here. Yeah, that might not be that easy, right? So I want to be a buyer underneath the range low, but we're so bearish. And so the first thing I think of is, okay, if I want to be a seller down here, right, we're bearish. If I want to be a seller, this is probably not the place to be selling, right? Because, after all, even if you didn't even see that range, we're sitting right on that low of day from today. If you recall, they got that gap, right? That kind of Sunday evening gap, right? Market gaps down. They came back, they filled the gap, and then by the end of the day, they had finally made it back down to retest the low. If you traded last Monday, go back and look at last Monday's trading session, and you'll see a very similar scenario. Not exactly the same, but we kind of had that in mind this morning while we were watching this thing gap down, fill the gap, and then grind lower. So go back to last Monday morning, you'll see a good example of a very similar situation we saw here on crude oil. But I'm getting ahead of myself. So I know I want to be a seller, but I'm not in a very good spot to sell here, right? I don't really want to sell here. I know I want to be a buyer underneath that range, but it's too bearish to buy. So what am I supposed to do with this? How can I get long while respecting the momentum of the bears, right? And this is where we start to anticipate, what if I wanted to buy the low here? Right? What if I wanted to buy the low, but what if I was able to anticipate where sellers might be starting to come in and sell off this high? I'm starting to think, right, I'll bet a lot of people don't see this range and they think this is just a straight bear market. If this was just a straight trending bear market, I'd be looking to sell off the high of a channel, right? Trending markets, I like to use channels. The problem though is, again, it's not just a trending market, it's a range market. So I'll bet you're going to see a bunch of people here that try to sell off the top of that range, off top of that channel. And if I can get these bears to try to sell here now I will have had them try once to sell, I will have had them try twice to sell, and now I've really got a couple options I can get in on, right, for a buy back up. My favorite way to be a buyer in a bear market is to use what I call a nested failure pattern. So if I zoom in here a little bit, I'm going to get rid of this measured move. So basically the plan is pretty simple. I'm too low to sell. I'm too bearish to buy aggressively. I want to buy relatively patiently, right? Conservatively. And so I'm anticipating here now we can go back into that range. That's one very, very, very logical scenario to get ready for tomorrow. And to do that, what I really want to do is get my hands on, I've got the bears trying once off the EMA. I would anticipate you're going to see more sellers coming off the top of that channel. And there are really two patterns I'm watching for. One is a trap low underneath this prior swing. This would be a pattern I call a crown reversal pattern. And basically, if you're familiar with this newsletter, you know this is a simple nested failure, right? It's a counter trend buy. Anytime I see a bear market and I'm sitting here at support, I don't want to sell aggressively down here. If I want to be a buyer, I've got to really respect the momentum of these sellers, right? The sellers are not going to give up without a fight. And so what I'd like to do is let these bears kind of wrap the noose around their neck, so to speak, so I can then buy into their stop losses, right? Because I'm going to need that edge to go against this trend here for tomorrow. And keep in mind, I wouldn't recommend going against the trend if it was a trending day. It's not a trending environment. It's a very important distinction here. It's a range. And ranges tell us to buy low. So I want to try to be a buyer low, right? I want to buy low. One of my favorite patterns to do that is called a nested, right? It's a nested failure pattern. What I'd like to do is buy nice and low down around the low of that prior swing with that nested failure pattern. Now, we may not get that. I'll be honest. We may not get that far of a pullback. We may only get this thing to kind of rattle off that high. And once I see those bears committing off the high of that channel, now I know where their stops are. And those stops are pretty much gold for a day trader like me, because now I know that if I can buy right into those stop losses, that would be another option here for me to use that nested failure. So two ways to look for it. The ideal scenario would be we get that short off of the high of the channel. We get that double bottom. Even better would be a trap low, nice strong signal candle, and I can now use what I call a crown reversal. It's kind of a nested failure with a little trap, little double bottom down there. That would be ideal to look for tomorrow. That way I'm respecting the sellers, but I'm following my plan of buying off that low. The second one, which would be a little more aggressive here now, would be I still want to anticipate these bears coming in, but once those bears come in, what I can do is I can slip a buy order in right above those highs here, knowing that this is where stops will be waiting, and I can buy right into those stops. Again, this is all kind of leaning on the idea that it's a bear market under a range low. I want to buy underneath that range low, and I have to respect the bears before I can do it confidently. I'm trying to buy into those stop losses as we run back up into that trading range. Now, another scenario you want to plan for is, what if this thing opens up in Asia and just takes off back inside the range again, right? If I don't get the setup I'm looking for, what do we do if it runs higher here? If it runs back into the range and kind of gets swallowed up, right, by that trading range, now we'll do what our plan always is. We'll focus on buying low and selling high by using those failure patterns, right? We'll wait for the price to get below the range, and I'll use what I call a seller failure to buy underneath the range now, and my target will be on that trade, right? Again, it'll be a seller failure, right? So imagine for a moment we run back up into that range here. We sit and go sideways for a while, right? That's going to give me a bullish bias now into a range. I always want to buy underneath a range with a bull bias. And to do that, I'll wait for a breakdown. I'll wait for that moving average to come over. I'm going to look for sellers to try to sell off the EMA. The easiest way to make a buck in day trading is to anticipate traders on the wrong side of the market and buy into their stop losses. That's another example of how I can creatively use a failure setup, right? This one's a straight failure, right? Whereas the previous patterns talk about were called nested failures. And you'll learn more about that in our video classes. Now, that's a good strategy for tomorrow. Now, a couple more things you want to think about here, a couple more scenarios to be ready for. What if we don't get any pullback, right? What if this thing just sits down here and turns sideways into a range? This could easily happen. You know, we're sitting right on the low of day right now. I mean, you know, they might need to resuscitate this market again. You know, everyone's worried about the Chinese economy and in turn the demand for oil right now. So what if we just sit here, right, and keep going sideways? In that situation, we'll look for a new trading range down here. You know, this does happen a lot where a market will have one range. It will then jam lower and then create another range underneath. Once that happens now what I'll do is, it's a bear market obviously, into a new range. What do we do with the range? We buy low, we sell high. What do we do with a bear range? We sell high. We wait for the market to go up. We wait for those buyers to come in, and they're trying to call that bottom. But remember, that new range down here, that's the most important factor now. And now I'm going to wait for those buyers to take a swing at that breakout pullback and look to sell right into those stop losses. Does that make sense? Right? So again, remember, this is if we sit down here for a while, right? This is if we sit and sit, what's going to happen? A lot of volume gets traded around that area. It becomes a very big magnet. Anything that goes up will probably come right back down again, and that's where I can use that failure pattern that we keep talking about, because anytime I see ranges, I know failures are a big part of this. Now, if the market keeps grinding lower, right? Let's just say it keeps grinding lower here. I'm going to leave that channel right on there. And I'll look for opportunities here now to sell off the top of that channel. Because at that point, right, now, we won't have to worry about this range back here. Does that make sense, right? So if we come in tomorrow morning, this thing just keeps on chugging lower here. Well, now the gig is up. We're not in a range any longer. Now we're in a trend, and whenever I have a trending market, I like to use channels, right? Range-bound markets, I'll use ranges, obviously. Trending markets, I'll use channels, and we'll look to capitalize on a trap high above a prior swing. That would be ripe for one of those first channel tests with a trap high we talk about in our video course, right? The first time we pull back to the high of that channel, little trap high for a short coming back down to retest the low. Again, that will be that the prerequisite for this is it's got to keep chugging its way, right, going lower. It's got to prove to us that it doesn't want to go back up into that trading range. And then the last scenario is what if we hear from OPEC? You know, what if the Russians get on board and this thing just jumps, right? What could we do in that situation? Well, the first thing is we have to wait for it to really pick up steam, because a big move higher is just not enough to call a reversal right now. So my best option would be a 1, 2, 3 reversal. So if we can get a strong move up, then we pull back to the moving average, I'm going to look for those buyers to hold that pullback and jump off the EMA. You'll notice that's the one thing these buyers have not been able to accomplish in the 3, maybe 4 times they tried today, right? Every time the market's gone up, the buyers have failed and come right back down again, right? So you got to be careful just trying to predict that. What we're looking for, though, is a strong move up, right? This could be a short covering rally, profit taking, a pullback to the moving average, right? Then the key here is a strong jump off the EMA, because that strong jump off, that tells me now the bears have walked away and the bulls are taking control. Then what I'll do is I'm going to mark up that swing high. I'm going to draw a trend line off of these higher highs, and I'm going to draw that channel off of that big low down there. Right, and you'll see a couple examples of this as we go deeper into this video tonight. We're using that same technique on the E-minis here tonight as well. That becomes my sweet spot, And now what usually happens is we'll usually be just below the moving average, right down around those lows. I call this a 1, 2, 3 reversal because of the 1, 2, 3 for the reversal into a hidden channel pullback. 1, 2, 3 reversal into a hidden channel pullback. Okay, that is the most reliable reversal pattern that we use. And I'm not trying to predict the reversal, right? I'm not trying to trade the reversal. I'm waiting for the reversal and then you're getting in at a reliable location. That's the key to success when it comes to trading. We're not trying to predict anything. Right? You try to predict, you'll get run over. It's not reliable enough, right? Skip the predictions, go with momentum, buy low, sell high of the range, do what works, right? There's no need to be predicting these breakouts or these reversals. There's plenty of very high reliable trades, right? If you just know what to wait for. So that's the most reliable. Now, the more aggressive one. If we see this thing starts ripping higher, right? If it starts ripping higher here, what you want to look for is a shallow pullback and a higher high. If I can get a shallow pullback and a higher high, you'll notice never got it, right? We haven't seen this on oil yet this week. I know it's only Monday night, right? But we haven't seen that at all. If I can get that higher high, now I can draw a trend line here and I can look for a trap low on this, right? And buy that trap low. A lot of times this pattern will be just below the moving average. A lot of times it'll line up right with some sort of hidden channel, right? There'll be some sort of hidden channel drawn those highs to give you that sweet spot to buy that low. That is something to be watching closely if it starts to really run higher here for the oil buyers. So now I think we have a pretty good plan in store here, right? I'm looking for that nested failure to buy off, again, trying to get those bears to commit off the top of that channel, right? Or do we go back into the range, get stuck, get underneath it and buy low from there? Or don't forget, do we get stuck down here, right? And get sideways down here, shift the range lower, sell above the top of the range with a buyer failure? Do we keep chugging along, going lower? If we do, right, I'm looking for that trap high off the top of that hidden channel, or do we rip higher, right? Do we get the 1, 2, 3 reversal, mark the channel, and buy the low of that hidden channel? Or do we get that ripper going higher, right? Shallow pullback, higher high, trap low. What do we call that pattern, by the way? We call that a two-try trap pattern, right? It's a great pattern, but you got to wait for that big, right? Again, it's got to really rip as it goes higher. All right, boy, there's a lot to cover here on a market that really didn't make more than 107 ticks today. There's a lot of things to get ready for tomorrow. Tomorrow morning, don't forget, in the trade room, we're going to kind of break this all down again. We'll update our charts and we'll make sure we do it the right way. If you're not going to be with me tomorrow in the trade room, the next best thing is to grab our free trading course. I'll put a link in the upper right-hand corner. As part of that free course, you'll learn all about all the patterns that I've talked about so far. You'll see hundreds of examples of failure patterns, trap patterns, how we draw ranges and channels. So again, if you're not with me tomorrow in the trade room, make sure you grab that free course linked up in the upper right-hand corner. And don't forget all the links I talk about, everything I talk about tonight, I'll put it linked up in the description of this video. How am I doing so far? Is this making sense? I'm trying to go slow, but trying to move fast here. A lot to cover here tonight. If you're enjoying it so far, hit that thumbs up button. And don't forget, if you have any questions, right, type those questions right in and I'll get you covered. How about some S&P right now? Now, the hard stuff is over. Right, the oil was tricky. The S&P and the Nasdaq are pretty easy within reason. What do we know about the S&P right now? We know we're bullish, right? That's one thing for sure. We know we're bullish, and we know we're only a little bit off of those all-time highs right now. Now, what does that tell you? If we're bullish, but we're a little bit off those all-time highs, now I know the markets are crazy right now. I know there's a bunch of FOMO, flowing through the veins of these markets right now. But in most situations, if you see a big move up, right, 1, 2, 3 legs, and we are just knocking on the door of all-time highs, and again, I realize lately things have been pretty crazy with FOMO, right? Markets have been pretty bullish lately, but I would imagine a lot of traders right now are going to go, this is a little bit too high. for me to want to buy up here, right? If you want to get long, you got to do it on pullbacks, right? You got to do it on pullbacks here. We're not this to me at least, and I'm kind of old school, right? I've actually seen what a bear market looks like before. A lot of traders in this world, they haven't been trading long enough to even see what a bear market looks like. Believe it or not, how crazy is that, right? Could you imagine? I mean, if you got less than 10 years of experience right now, you really haven't seen much of anything besides a bull market. This is, in most experienced traders' minds, it's a little bit too high to be buying right now, right? You're buying at a premium price up here. If you're buying up here, then you have to, that tells us you expect this market to keep going higher from here. And there really is just no guarantee. Now, usually, when a market is really moving like this and it's a little too high to comfortably buy up here, we usually see, one of two scenarios. We usually see if people just reject the idea of buying up here, it almost always goes into a range. In fact, you can quote me on this. Most of the time, when we ever see a big move in one day, the following day is usually going to be a bit of a range-bound market because nobody wants to take profit yet. They're trying to hold their targets up to that measured move, up to retest the all-time highs. So I can easily see why traders would hold on to their positions, right? Anybody who got out of their positions a few weeks ago, they're kicking themselves right now for not, kind of turning off their brain, so to speak, and letting the trend run. But I would imagine a lot of traders will say, let's pause right here, and they may not want to buy anymore. I would also imagine nobody dreams about selling this thing right now. Who wants to sell this market? And so with buyers not buying and sellers not selling, then the market will typically start to go sideways, right? And so that's a very common scenario, whether it be a rectangle or a triangle. Now, what would our plan be if we saw a range like that? It's a bull market into a range. What do you do in a range? You buy underneath a range with what? With a seller failure pattern, right? We just talked about this on the crude oil, right? Crude's bearish, but we talked about if the market goes back into that range. Excuse me, hiccups. So I've got this bullishness way, way high up in the chart. I've got to anticipate a range, right? I really do. That's definitely my radar for tomorrow. Also, too, what if something happens overnight? Again, I want to keep bringing this up right now, but we've got a lot of concerns that we're going to get some big juicy headline from Asia, right, coming out of China here, like, oh my goodness, we just realized there's like a gajillion deaths and not just 800, right? That's a possibility. That's a lot of concern in the market right now. A whisper of that overnight could probably have buyers saying, I'm out of this thing, right? And this thing could really sharply pull back, right? So that, when you're getting back up to these all-time highs again, when you've got some sensational headlines on the horizon, this could easily spook this market. So we definitely want to be prepared for that potential really sharp pullback and how we want to trade that. Because it's not a guaranteed reversal, right? It's definitely not, right? It's just a deep pullback in a very strong bullish trend. So I think those are kind of the two big things I want to make sure I'm ready for tomorrow, and I want to make sure you're ready for it as well. Now the easy one is the range, right? Now we'll know the range here in a couple hours because we'll start seeing double tops, double bottoms. Once I see that range, remember, I can use that trading range to find the support levels below, just like we talked about on the oil, and we'll see more of that on gold here tonight as well. But the most important thing though is whenever I have a bull market into a trading range, the path of least resistance. Don't try to trade breakouts. Wait for what will happen is once those buyers run out of bullets up here, right? Once those buyers run out of bullets, they'll start to pull back. And once we get that pull back, now it's on, right? Now we can get some bears coming in. They're thinking this thing's a breakout. They're trying to sell that breakout pullback. And we can simply use that range to buy underneath the range. You'll also notice I get a reversal line here as support. I have a hidden channel acting as support. There's a lot of reasons to really like this area, right? This whole area down here, right? This whole area here is a great area of support. And if I go sideways, I wait for that move lower. I wait for that breakdown. The breakdown is not a reversal. It's just a pullback. We wait for bears to commit off the moving average, and we buy right into those stop losses. You can see something similar to that, right? We go up, we pull back. Whoever is trying to sell off that pullback is unfortunately mistaken. The trend is very bullish, and you got to be a buyer right into those stop losses. Very, very similar, a seller failure pattern. I'd love to see the exact same thing here off the low of this hidden channel for tomorrow. Now that brings me to my next kind of scenario here, and that is, if we don't go sideways, one easy pattern would be, the bears come in, they try to sell off of it. Again, we're trying to buy off support here right now. I wait for bears to commit, right? I wait for those bears to commit off the EMA. Now I know exactly where their stops are, right? Or as we say in our trade room, now we know where the pain point is, right? Now we know where the bears, the counter trend bears, are yelling, uncle, 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 right? Now we know where the bears are running into trouble now, and now we can buy right into those stop losses, right? For usually a nice, easy 1-to-1 first target. Now, watch carefully, because a lot of times that will quickly pull back and give you another option for the entry on this. And this is a great example of what I call a failure into pullback combination. We see these a lot. What happens is the market pulls back, the bears get trapped, you're buying into that failure, buying into their pain point, as we say, and it quickly comes back to the moving average to give the buyers now the chance to get in on the way back higher. What I tell my clients is really try to get in on that failure. The failure is usually the best one you're going to get. But if you don't feel confident taking the failure yet, right, once you see the failure, then grab the pullback on the way up to retest that high. That is a relatively shallow pullback we're watching for here tomorrow. But what if this thing gets spooked, right? What if it really takes a nosedive here? What if it really gets spooked here now? Now at this point now, if it really gets spooked and runs lower, now this is just like crude oil, right? Remember on oil? Oil was bearish, but I was trying to buy below the range. Remember that? What was the pattern I used on oil? It was a nested failure, right? It was not just being aggressive and buying into a seller failure, right? Remember, the assumption is it's a very strong pullback, right? Something spooks the market. On that, right, is that a reversal? It's not a reversal at this point. It's just a deep pullback in a very bullish trend. I'm going to wait for the bears to try once on the pullback, try twice on the pullback, and once I got those bears committing once and committing twice, now you know exactly where their pain is, right? Now you know exactly what's happening, right? Those bears, when they fail, this thing's going to snap right back up to retest those highs. And keep in mind, too, that we see a lot of these combinations. We talked about a failure into a pullback combination. This is a failure into a two-try trap combination. This is a great combo setup that we see quite a bit. And it makes sense, because what happens is when you get that deep pullback and the bears try once, the bears try twice, right? A lot of times they'll just flip their position and go from being short to being long. And that results in this big explosive move higher, right? Again, what I would do is take a 1-to-1 first target, trail that stop, leave the runner back to retest the high. The moral of the story, the point I'm trying to make though is, as we run higher, when it really blasts higher now, look for that higher high and grab that trap. You're going to want that trap because you're trying to get where? Up to retest the highs, up to retest the all-time high, right? Screenshot this if you want to, right? Screenshot this if you want to. It's a deep pullback. It gives you a great risk-reward ratio, but with that deep pullback comes a price, and the price is momentum. Once that momentum snaps back up, look for that two-try trap. Right? That two-try trap. You can see something very similar back here. So we run higher here, we pull back, right? Little higher right there. What's going to happen? Right below the low, right? Trap low. Bingo. Right there. That's the same exact pattern I'm talking about, right? These two patterns are exactly the same right there. Okay? Hopefully that makes sense. Right? But again, you got to get a strong move up to get that, right, to get that pattern, and you got to make sure you have enough space to go before you get back up to retest that high. So those are three scenarios we're kind of watching for here on the S&P. Now, just like on crude oil, right, if this thing doesn't pull back and it keeps going, I'm going to keep this hidden channel right here. Right? I'm going to keep that hidden channel right there, and I'm looking for that trap, right, off the low. This would be that trap. Basically, what you look for in these situations is if it keeps going higher without a pullback, what's going to happen is professional traders are going to say, okay, this thing's not pulling back here for me. It's time to get more aggressive to get into this market. That's what traders do, right? When they see a big move up, they go, okay, give me a pullback. After a while of waiting for a pullback, if they're not seeing a deep pullback now, they go, okay, apparently there's something here I don't see. And what you're looking for now is you're looking for a combination of a trap entry, right? Trap off the low, moving average failure into a pullback. There's a lot of different ways that we can trade it, right? My favorite is always that trap entry though, that trap. It's the first time it pulls back to the low of that channel. Trap low, into a seller failure, right, into a bullish pullback. And we've talked a lot about those setups here already here today. And again, like I said earlier, tomorrow we'll do this together. If you're not with me tomorrow in the trade room, the next best thing, you got to grab that free trading course. That way you can learn all of these setups. I'll send you a lot of examples of how we apply that strategy to our favorite markets. That way when you're with me on the newsletter, you can really participate and really get the most out of our time together here. So again, as we go higher, watch out for ranges up here, right? Watch out for ranges up here and buy low as we go. Now, what would a reversal look like? What would a reversal look like here? It's just what we talked about on oil, right? I want to see a strong move down first. Now, a strong move down is not enough to reverse this trend. What do you need? You got to hold a pullback and jump off the moving average. Okay, see what happens? Every time we pull back the moving average right now, the bears are foolishly coming in and trying to sell off it. They're getting their faces ripped off right now, trying to call these tops. Right? That's why I said earlier, kind of the common joke in the marketplace right now is among professional traders is just kind of turn your brain off and just trade with direction. Stop overthinking this so much. A lot of traders are really tripping over themselves by overthinking this because they're reading too many headlines from the New York Times, the Wall Street Journal. Read the chart. The chart is bullish, right? Don't get so paranoid about big collapse coming, big crash coming, right? Trade the chart. When the crash comes, we'll trade the crash, right? But trying to position yourself ahead of a crash has wasted much more profit than making the money off the crash itself, right? That is kind of historically what happens, right? So bottom line is, how do we reverse? We look for a strong move down. We wait for that pullback to the moving average. We jump off the EMA. That tells us the bears now have control, okay? They haven't been able to get it done here yet today. What do you do then? You mark up that low, okay? You mark up the new trend line. You find the hidden channel, and you look to sell off the top of that hidden channel, right? Your sweet spot is that low and the top of that channel there. What do I call that? It's called a 1, 2, 3 reversal into a hidden channel pullback, right? It's a great setup. The hardest part is staying patient, right? Staying patient. And then again, you know, if we hear something from Asia and oh my goodness, right? And now the market just tumbles, right? Running lower. What's the best way to trade that? As we go lower, it's that same pattern we talked about here, right? Except it's the opposite direction. Shallow pullback, lower low, trap high, right? And again, don't let the simplicity of this pattern fool you. There's a lot of psychology in this setup, right? The lower low, first of all, is a big confirmation. A lot of times it'll go down, try once, try twice, and snap back higher there for a nested. Okay, this is not the case there. That lower low tells us now bears are waiting, right? Bears are waiting to smack that sucker as it goes. And usually this will be just above the moving average. And I always like to find, right, usually there'll be some hidden channel on there. I'll find some lows back there and try to combine it there with the top of a hidden channel. And those types of trades, when you get them, take them. Right? Where's my target? Back down to retest those lows. So the S&P really has a lot of great potential here for tomorrow. If I was a buyer right now, and I definitely am here on the S&P, this is a little bit too high for my liking. So will we go sideways up here? Will we see a real deep pullback? Will the market reverse? Time will tell right now, and I think we're going to probably see a lot of clues here coming out of Asia. Now, this strategy on the S&P really is very similar to the strategy we'll use on the Nasdaq. The Nasdaq, as you know, is a little bit ahead of the game, right, ahead of the S&P, because the Nasdaq is way above those all-time highs now, which reminds me, if you draw a line across those prior highs, right? I didn't put on the chart here tonight. You don't really need it. But that puts us right around that 94.60 area. And that's a really, really, it's just an important level to be aware of here overall. So what I'll do is I'll just pop that on there just so we have that there for the rest of the video. It's not necessary because you'll see in a moment here, I don't think we actually need that level. But boy, oh boy, it definitely doesn't hurt, right? It definitely doesn't hurt to know where that level is. Okay, what do we know right now in the NASDAQ? Very similar to the S&P. We know we're bullish. We know we're pretty high up here, right? I'm about to take some Dramamine, right? Some air sickness because we're way up there right now in the nosebleed seats. We're just a little bit above that 9,500, right? That 9,500 may be a magnet. The NASDAQ's been ignoring pretty much everything besides the 9,000, 9,500. I would imagine 10,000 by just definition would be a huge big round number. That's a little bit too much to dream of right now if you're a NASDAQ bull. But we know we're bullish, right? We know we have a very strong run higher. But again, we know that because we're so lofty on this chart right now, buyers may come in and say, you know what? I'm not going to buy this. I'm going to wait, and that may cause the market to go sideways tomorrow. If that happens, what's the best pattern? The best pattern is to wait for that pullback. Wait for those bears to try to commit off the moving average to be buying their stops, right? That's my go-to pattern anytime I see a bull market into a trading range, right? And speaking of trading range, that little range that we saw here, just we went into lunch here today. What is a range, by the way, guys and gals? What is a range? Range is a balance area. And if you were to look at volume right now in the NASDAQ, you would see a lot of volume right there, right? And a lot of volume would pile up again right in that area too. So the bottom line is, if you were to look at the volume profile on this, the volume profile on this probably goes something like this, right? And so that's going to be a high volume node right there. That'll be a high volume node right there. Why does this matter? Well, you don't really need the volume profiling, right? If you were to, have one of those fancy indicators over here where it plots the volume for you, right? They're called volume on price. You would see that there's a lot of volume right in that area. You don't really need it, right? Look for a range. Anytime you see a flat moving average in the chart like this, you know there's going to be some high volume there because you got overlapping candles, right? Anytime you see overlapping candles, you know there's been a lot of contracts changing hands at that price level. That leads to a lot of volume. And if you've read some of the most popular trading books these days, a lot of people tell you to pay attention to those high volume nodes. So that is something, if you follow that kind of theory. For me personally, I've always believed that once I see a range, that range becomes a magnet. Right? Like I said earlier, right? Ranges are magnets. Why? Because that's where the most amount of volume is traded. So this is why I tell my clients, don't worry about all the fancy indicators. Just learn how to read a chart. When you see a range, you know it's a magnet. And that'll be a great level of support for us to use as well here. So we know the market's bullish. We know we're very high up and lofty. We're looking for that range, right? Try to get that. Right, try to get that range forming up top here, get that move down, get that seller failure, right, and that buy going back up into the range. Or maybe we get a pullback, right, off of that, right, down to that low. Again, I've got that 94.60 area, 94.60, that's a tongue twister, right, down to that area. Again, same thing on the S&P. I've lined up these highs. I brought it down to that low, find that hidden channel. All we need now is to see that pullback. That will give us underneath the moving average. If I can get underneath the EMA, I can look for sellers to try to foolishly sell the pullback off the EMA. I can buy into their stops. I can buy the pullback combination. Again, we call this what? A seller failure into a bullish pullback combination setup. I call it a combination. You don't need to take them both, but they usually do come together at the same time. They usually do come as kind of a combination package, kind of a 2-for-1, right, if you will. So keep an eye on that. Or do we really drop? Right? If this market really drops now, what will I have to be aware of? Momentum. I like the deep pullback. Don't get me wrong. I love a deep pullback because a deep pullback allows me to risk small to earn large, right? Don't get me wrong. I love a deep pullback. The problem we have, though, is a deep pullback comes with the price. What's the price? Momentum, right? And when momentum is really strong for the bears, they're not going to give up that easily. They're going to try once. They're going to try twice. Then we know we've got everybody piled on, and now we can pull the string. basically what you're doing is you're simply buying. You're putting a buy order right above those highs here, and you're buying right into those stop losses as they go. And remember, once those bears get stopped out, at this point now, the buyers are buying the dip, the sellers just got stopped out, they're buying, and a lot of times those sellers will reverse their positions and it will rip higher here. And when it does run higher, you're probably not going to get that pullback. Right, you're probably not going to get it pull back all the way and then go right. That pullback combination is probably not going to happen any longer. In those scenarios, you look for that what I call a two-try trap pattern. Right, we saw this on the S&P a few moments ago. Right, so it's a seller failure. Again, it's a nested failure with those deep pullbacks, then into a two-try trap. And again, that two-try trap will almost always be just below the moving average. And if I've said it once, I've said it 1,000 times in this newsletter, the best trades you're going to get in a bull market are just below the EMA, right? In a bear market, be just above the EMA. Okay, that's where professionals are always waiting. Professionals are waiting for those deep pullbacks because they know that rookies are not prepared. You got to remember, these deep pullbacks, there's a lot of traders in the market that are not mentally prepared for fast moves, and they make impulsive decisions. And those impulsive decisions that are, they're not reliable trades, you can capitalize on them by having a plan of your own. This is why we go through this plan before we trade the following day, so we know exactly what the plan is if we get certain situations. If it does this, we do that. If it does this, we do that. That way, tomorrow, they're not going to fool me into chasing the move lower, right? I'll know a deep pullback is not going to be a sell, right? We know to be patient, wait once, wait twice, and then buy right into those stop losses. Now, what if the deep pullback holds? Right? What if that pullback does hold? If it does hold, well, now let's wait for the bounce off the moving average. It's more than a bounce, by the way. It's a strong move off of it. That momentum jumping off the EMA is so important. I'm going to mark up that low now. I like to use those hidden channels off the big high, right? And then, of course, look to sell off the top of that hidden channel. Where's my target for the bears? The target for the bears is easy. Right back down to retest those overnight lows. Where's my target for the bulls? If I get a pullback, it's back to retest the high always. And then from there, the measured move would be a nice, easy target if they can keep going above that high. Very similar on the NASDAQ to the S&P. Will it go range bound? Right? Will it pull back? Will it give us a deep pullback? If the market keeps running higher, what do? If it keeps running higher, I'm looking for that combination, right, of that trap into failure off the EMA. Same basic idea, right? Same basic idea here. We want to buy low. We're not trying to buy high. A possible trap off the low, hidden channel, right? Seller failure into a bullish pullback pattern. And again, I'm just simply illustrating, so I'm ready to go for tomorrow. So you're ready to go for tomorrow. If you're not with me tomorrow in the trade room, you got to grab that free trading course linked up in the upper right-hand corner, or grab it in the description of this YouTube video. Last but not least here, over on the gold. Let's take a gold tonight. Gold's pretty choppy here right now, and gold you can definitely feel. Well, remember you got Powell talking tomorrow, so this might be the big reason why gold is so sloppy here tonight or today. Remember, Powell's talking monetary policy tomorrow on Capitol Hill. Although we don't expect him to be saying anything out of the ordinary, anything off script, he probably will hint at what he thinks about the coronavirus issue and kind of how things go in there. So that's probably why gold was so choppy and sloppy today. What do we know about gold, though? We know the momentum is bullish. It's been bullish here for about a week and a half now. We know we're seeing higher highs. We know we're seeing higher lows. We know we're bullish. We know every time it goes lower, the buyers keep buying it right back up. Every time it goes below the moving average, the buyers keep buying it back up. They don't seem to be getting very far with it, right? The highs are not very high. You notice that? Right? Those higher highs are not really that impressive. So it's bullish, but what does that tell you? It tells you the buyers are not buying breakouts. Right, the rookies are buying breakouts because you can see they're not getting very far with it. Rookies can't really move these markets. Professionals with their big accounts, right, and their big position sizes, they can move these markets. Professionals are clearly not buying high right now. They are buying those dips, right? They're trying to get underneath the moving average, catch those sellers trying to reverse things, and they're buying into their stop losses. It's pretty obvious. We want to focus on buying as low as possible when I see a situation like this and resist the temptation on gold right now to buy breakouts. breakouts, right? Unless something changes tomorrow, I would anticipate that happening more into the future this week. What else do we know right now? We also know we have a range on here. This range is pretty easy to see once you kind of know what you're looking for, right? Looking for double tops, double bottoms. You can easily see double tops and double bottoms right there in front of you. What does a range tell us? Buy low, sell high. It tells me now I can use the size of the range to find my sell zone, the size of the range to find my buy zone. I want to buy low, I want to sell high, I want to avoid the middle. Remind me again, what was my favorite pattern on a range-bound market? It's a failure pattern. And we see a great example back here, right? It's a bull market running up. We see a nice deep pullback, deep enough to trick those bears into trying to sell, and you're buying right back up, right, into those stop losses. A very simple strategy here. As we go lower, I'm simply waiting for those bears to come over, right, get caught, trying to call that reversal, trying to call that breakout pullback, and buying right into those stop losses. If we get lucky on this, we might get a failure into a pullback combination. The only problem is, though, is a lot of times that range will sneak in. You don't want to take that pullback pattern if it's inside the range, right? Stay out of the range. Buy low, sell high. So we know we're bullish. We know the range on this. I also really like this hidden channel. This is the one thing I'm really hoping for tomorrow. Hopefully, this could even be extended back here probably. Hopefully, we can use this hidden channel. You know, and again, it's kind of the same idea, right? Underneath the range, get those bears to commit, right, into a seller failure and go right back in. The only other scenario that you kind of want to be ready for here is if Jerome Powell does say something tomorrow that really gets this market moving, right? For example, you know, we had that range from last week. Remember that range from last week back here? You know, remember, what is a range? A range is a magnet, right? So there's potential now that we may see something from Powell tomorrow morning or overnight from China, and the market might really tumble, right, down to that range here. We may see a real big kind of gap down, so to speak. In that situation, how do you buy it? You buy it with that patient nested failure. The 1, the 2, yeah, and then back up. And remember, a lot of times that thing will rip higher with that 2-try trap. All right, we've talked about this many times already tonight on the video, right? A nested failure into a 2-try trap. So if it does really kick back on us, right, wait for that 1 try for the bears, 2 try for the bears, and then buy into those stop losses. Just make sure you're not getting too aggressive, because that strong move down, right, they could easily now hold that pullback, make that run lower, and now we're looking for shorts, right? Now we're trying to sell off the top of that hidden channel for that move back down to retest those lows. So it definitely could reverse on us, but again, obviously we'd hear from Jerome Powell. It's tough to imagine anything Powell will say tomorrow that'd be good that'd be bad for gold. You know, I just don't see Powell saying, you know what, I'm pretty confident everything's going to be great. I just don't think he's going to say that, right? He's going to follow his script like he always does. He might talk about coronavirus, and he may hint at the fact that that might impact our GDP, right? He may hint at Boeing, right, which is going through tons of trouble right now. They're saying that Boeing could shave off, 3 to 4 basis points off our GDP, right? I mean, that puts us under that 3%, threshold. That's something he might say. None of that is bearish for gold, right? That's all very bullish for gold. So if we do see it rip higher here, what would be your best plan going long on this? You wouldn't want to buy high, right? Because we already talked about the fact that, right, buying breakouts is not a very profitable strategy right now. So what would you want here? You'd want to see that 1, 2, 3 breakout, right? Strong move up. Don't buy the breakout. Wait to hold the pullback. And if they can jump off, okay, now it's on. Now the gig is up. Now we find our channel. And remember, these 1, 2, 3 breakout patterns, they always take a little while to set up, but then they seem to trigger real fast, right? You don't want to get aggressive at anticipating or predicting the breakout, but once you see that rip going off the moving average, now you got to get aggressive and hit that sucker when it comes back to the low of that channel. It's one of those trades where your only job is, when you see that 1, 2, 3, your only job right now is to get everything you can into that low. Right? That'll be a great setup if we can get that jump up, that pullback low of that channel. Or if this thing just takes off to the upside here, what's the best pattern? Shallow pullback, higher high, you got it. You got it. I'm glad you're paying attention. 2-try trap pattern. But again, right, I'm not doing this right. I'm not doing this a small breakout. It's got to be a very strong breakout here. Higher high in price, then trap low. You should be just below that moving average, right, as we go higher. Now don't forget, if we can get that big move higher here, there's a lot of open space overhead. This gold could make a run up to those, not all-time highs, but for the life of, the last couple of years, one of the, kind of the highest we've seen in a while here, 1598, 1600. That's a huge psychological level. Again, if Powell doesn't go off the script tomorrow, right? Maybe not getting that big breakout, but if Powell does put his foot in his mouth or maybe bite his tongue a little bit, people can tell, right? I wouldn't be surprised if we use that breakout going higher. Just don't try to predict that breakout. All right, guys, now you get the plan here for the bulls, the bears. Don't forget, tomorrow morning, 8 o'clock Eastern time. If you're not with us tomorrow, grab that free course linked up in the upper right-hand corner, or grab everything out of the description of this YouTube video. And as always, come out and join me. Right, the best way to learn and earn correctly, right, is to do it with me every morning in our trade room. Right, it's all part of our advanced membership courses here at School of Trade. Our advanced course has all the video classes, all the tools and software tools, all the trading sessions, right, lifetime membership, unlimited to everything that we do. It's the best option for a new trader. Again, if you're on the YouTube channel right now, I'll put all the links to get registered as a new member in the description below the YouTube video. Don't be afraid here tonight to call the office. I'll be here, right, answering that phone call. If you have any questions, don't be afraid to use that live support tool on the right-hand side. And as always, if membership isn't quite right for you, make sure at the very least tonight you grab the free course as part of our free trial. That way you can at least make the most of our time together when we're trading, when we're going over the stuff on our nightly newsletter. So don't forget all the links in the description of the YouTube video. While I got your attention, don't forget, hit that thumbs up button, subscribe to the YouTube channel, post those comments in the comment section below, and have yourself a fantastic rest of your evening. And speaking of rest, get some rest tonight. Get a busy, busy day coming tomorrow morning. I'll see you tomorrow morning, 8 o'clock Eastern time. If not, come back and see us again soon, will ya? My name is Joseph, by the way. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.